Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, so the institutions that really move the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we must notice is that we have a market which is testing a quite strong historical structure level of monthly supply and resistance. In fact, from here, all this previous rejection to the downside was created. Again, here, the market tested its zone and rejected it to the downside. And at the moment, we can see how the market is testing the exact same level from which we could expect potential bearish price action to be developed away from the zone. At that point, also breaking this intermediate level of resistance that, since the market has now broken it to the downside, we could expect the market to retest it as resistance and reject it to the downside, because this is the previous level of support from which this move to the upside was created. And as we're now breaking it to the downside, what we know is that previous support, once it gets broken to the downside, it becomes resistance. So that is why we could expect at that point a retest of the previous support and resistance before then getting the rejection to the downside. Now, dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, what we can notice is that we just got a very strong impulse to the downside. Now, generally speaking, when you see an impulse and you want to measure the potential correction after the impulse, what you have to do is take your Fibonacci from the high to the low of the impulse leg. And in this case, what we can see is that we have a 0.32 Fibonacci retracement lining up exactly here, which is a level that was already acting as previous support preceding all this move to the upside, which also here in the weekly, since the market has now broken it to the downside, is currently acting as resistance. So also from a weekly perspective, we could expect a correction to the area before then getting a rejection lower. Going down on the daily time frame, what do we see? Now, from a daily perspective, things start getting quite interesting. In fact, what we can notice is that during all this impulse to the downside, there is one candle not related to the move, which is exactly this candle here, this green one, which shows how even though the market had very strong bearish momentum during this move to the downside, anyway, the market found support at this level. And since the market has now broken this level to the downside, this previous support is currently acting as resistance. From a daily perspective, we can also notice how, as we have an impulse also here on the daily, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg, which shows us how we have the 0.786 Fibonacci retracement from a daily perspective lining up exactly in this area, creating a confluence of resistance inside of this zone. And what we know is that inside of a confluence of resistance area, you have an increased probability of seeing institutional shorting. In fact, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market, and we check the data precisely for gold, what we can see is that with the last reports, net positions have been decreasing. We went from having 193.3k net positions all the way down to only 121.1k net positions positions. This shows how institutions are starting to move their positioning to the bearish side of gold, which is already rejecting that monthly resistance that we have identified at the beginning of the video. And then we see how we had 26,000 shorts added with the last report, fueling this push to the downside. Now, this means that if we will have a correction to a confluence of resistance area, there is a high probability that inside of this zone, we could see more institutional shorting that at that point would further increase the probabilities of making the market create a rejection to the downside away from the zone fueled by this institutional shorting. So if we get a correction to this zone, how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point, we could be looking for this potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.